Investors find optimism from events in Asia. The People's Bank of China injected nearly $100 billion into the national economy that should prop up the global economic recovery during the crisis. The US dollar is losing favor with investors. Market participants, including large speculators, are still betting against the US dollar. The minutes of the Federal Reserve are on investors' radars. The new trading week kicked off with a cautious optimism. Futures of the Dow Jones rose 0.4% in the early New York session to trade at 27,902. The S&P 500 was 0.5% higher. The rally of the stock market rests on nothing but investors' confidence. This trend will be hardly disrupted today. Today, the session is going to be quiet with a little macroeconomic data. Investors are anticipating the minutes of the July's policy meeting of the US Fed. They will be looking for clues to further monetary policy. Besides, the official assessment of the US economic recovery will shed light on further Fed's moves. Analysts assume that the bullish sentiment will cool down as the second stimulus measures will not be approved by the end of August. The feud between the parties has been put on pause because lawmakers are on a vacation leave until September. Investors need new drivers for optimism as the benchmark stock indexes are already at historic highs. The US dollar has been accelerating the bearish momentum. Its index is expected to go down as low as 92.85 in the long term. The US currency has been on the defensive until now. However, it could not resist any more in the early hours of the New York session. So it would be better to refrain from long positions on the US dollar, at least at present. Meanwhile, traders have revised their portfolios in favor of the euro. They are betting on the euro's strength against the US dollar. So, hedge funds have slashed net positions on the greenbacks futures. The last time when large market players were unanimously playing short on the US dollar was 2 years ago. Traders have been selling the US dollar for 5 sessions in a row. Its index is about to break the level of 92.47, the lowest level in 2.5 years. The clear-cut downtrend of the US currency is caused by the fiscal gridlock of the US economy. Dollar bears take into account weak macroeconomic data and uncertain prospects of the US-China trade relations. Commodity currencies perked up after Washington and Beijing had cancelled the meeting aimed at assessing the implementation of the first phase trade deal. The parties postponed the meeting due to scheduling conflicts. The Canadian dollar grew 0.4% against its American peer, having slipped to nearly 1.32. The United States and China have not announced yet a new date for the meeting between the trade delegates. Donald Trump ordered ByteDance to terminate operation of the US-based TikTok within 90 days. The president also sent a message that they would be able to step up pressure on other Chinese companies, including Alibaba. Market optimism is damped by two main factors of uncertainty: the resurgence of the coronavirus in Europe and the presidential elections in the United States. That's all for today. We continue to learn developments on financial markets. Subscribe to our channel and keep abreast on latest events with us. See you tomorrow.